So, if other people want to switch on their videos, would hugely welcome that. It look like a conversation. But by show of hands, yeah, Google has show of hands. How many of you done at least one angel investment so far? Yeah,
I
Anupam, good to see
three
you here.
Hero fans.
Hi, Alok. Good to see you.
सर आप ही सेशन ले लेते.
नहीं नहीं आपको तो हमेशा मैं सुनता रहता हूँ जब भी मौका
You've
मिलता है.
done so many of these. Okay. And just if you can put your hands down, how many of you would have done, let's say, 5 investments or more? Okay. Okay. Got it. Cool. I get a sense of it. So thank you.
Great. I think we have about 18 people, and people will keep on joining in. So I guess we can start. And I look. We thought that we'll keep the session very interactive. I had a set of questions that I had prepared, but happy to take questions from the community as well. Anything that is top of the mind, we would love to take it up. Just for a quick introduction, my name is Karan. I work at Meta full time. I lead marketing for Meta in India, and I run Accelerate as a passion project. So essentially, I run Accelerate along with a good friend of mine, Apoorv Chamaria, who had startup and VC at Google in India. So at Accelerate, we're trying to build an early stage accelerator for consumer brands and consumer internet companies. We've just finished one cohort with 10 companies, and we also are a syndicate where we invest in a lot of our companies which we accelerate, right? So we invest a $50,000 check size in the companies that we work with and partner with and help them scale, right? So as an education series, we do this masterclass on angel investing almost every week. We've been doing it now for the last 7-8 months, where essentially we try to get some of the best experts in the industry to kind of share their inputs on how they went about angel investing, their journey, what did they learn, what were some of the mistakes they made, right? And so essentially, this session is about trying to learn from the best. And talking about the best, today we have Alok sir with us. So when so maybe you can do a quick introduction, and then we can kind of get into the session.
Yeah, thank you. And I don't think there's a notion of best or not best in angel investing. All of us do it for different reasons. I'm an entrepreneur now for about 25 years. Started my first company in 1999, and honestly got a lot of support from what was then a very, very fledgling ecosystem in building my first company out. So when we sold that company, one of the motivations for me to get into angel investing was really to be able to provide some degree of support to other entrepreneurs who are out there, right? And so I started my angel investing journey in 2006 when we established the Indian Angel Network. And incidentally, the idea of Indian Angel Network was first discussed during the sale party of JobsAir when we sold the company. Right. So that was very much the reason why I got into angel investing, why we, created the Indian Angel Network. And my first angel investment was in 2006. So it's been about an 18-year journey now in angel investing. Of course, from 2006 to 2014, I was also running a venture capital business in the Indian market. And to that extent, my pace of angel investing was somewhat lower because I didn't want conflicts with my venture investing job. But after I came out of my venture investing role in 2014, that's when the pace has somewhat picked up. And I would reckon that I do something like 8 to 10 investments a year now. So my total portfolio, ever invested would be about 110 odd companies, maybe 5 plus minus 5 there, of which about 40-45 would have either shut down or positively exited so far. So the live portfolio would be about 70 odd companies. I have not been very sectorally focused. I do understand a bit of technology, or I think I understand a bit of technology. So to that extent, I have played in the technology-enabled spaces. But by no means is it as sharp as being deep tech or even consumer internet. It's been relatively broad. And one of the things that at least I have seen is that what is working in the Indian market or not working, what is the space which has momentum, changes every couple of years. Right. And to that extent, even as I look back, I don't see much merit in adopting a strategy which is very, very focused on one narrow space, even if you are specialized there, because the ecosystem momentum may or may not sustain in that particular space. Right. For example, if you look at job space, where I built my first business, I don't think we've seen any real innovation over the last 10 years or maybe 15. Right. I think the last significant innovation there, depending on which order you count it in, was LinkedIn, social recruiting, and Simply Hired, which was Meta job boards. And both of those happened before 2010. Right. So if I was looking at this and saying, hey, I understand recruiting, let me double down on recruiting, I would essentially be investing in substandard assets for the last 15 years. Right. So that's been kind of the motivation. Now, having said that, while when we started my angel investing journey, the idea was, hey, this is in some sense giving back to the ecosystem, and hence financial returns don't matter. It has, over a period of time, landed up being my best performing part of the portfolio. Right. So there are real returns to be made. And that is why we are seeing such a strong momentum, in angel investing platforms, in people creating syndicates for angel investing, in just proliferation in number of angel investors, right? So I think when we started Indian Angel Network 2006, we started with about 6 or 7 of us. And even till 2011-12, the activity was fairly subdued. In 2011, there are 2 things happened. One, the public markets went through a high, both in India and in the US. And second, incubators like Y Combinator started to happen. And I think those are the 2 things that suddenly started to build the momentum in India. We saw a sudden surge of membership into the Indian Angel Network. Right? Now, what happened was a lot of people came in, this was like running a sprint. And they invested aggressively for the next 2 to 3 years. Right? And then they said, hey, I'm out of the money that I had earmarked for angel investing. And guess what? Angel investing doesn't really give you returns in 3 years. So then they immediately tapered off and probably missed out on what was a golden period of angel investing that came after that. So the second piece, and we can talk about this depending on what the group wants to talk about, is I think if you want to be in angel investing, you have to diversify extensively over time. Right? And the minimum I would suggest is 5 years. Right? So if you got 100 rupees to invest, right, my minimum thresholds would be 20 companies over 5 years. So you're only investing 1 rupee in each company, right, on a somewhat index basis. No, so you're spending 5 rupees in each company, but you're only investing 20 rupees per year, right? So that would be the threshold minimum that I would recommend to anyone who's getting into angel investing, right? Doing 5 investment doesn't quite work. And I'm happy to kind of share the broad contours of how my portfolio has worked. And by no means is this the best constructed portfolio. My motivations for doing angel investing have been slightly different. So I'm confident that many of you can easily outperform the portfolio that I have built. But as a sample of, if you do 20 companies, what to expect out of it, I think it'll start to give you some of those, that flavor. Yeah, but I'll pause here. I want to kind of make this interactive, make sure that we are addressing the questions that the group has, and some of the other thoughts can come out there. Strike rates in my angel investing journey continue to be probably 1 in 5. So I think all of us continue to make more mistakes than the right bets. And to that extent, by no means, please don't treat these as things which are established. The standard in angel investing practices continue to evolve, and so do we.
Great. Thank you so much for sharing, that context. I think Gurpreet and Viraj have a question. Do you want to go ahead?
Yeah, hi, Viraj this side. Uh, would like to know about your highs and lows in terms of the overall portfolio. Like it has been long time since you have been into this space. So would you mind sharing the best performing ones and the lowest? Lowest would be of course write-offs.
There are many write-offs. Yeah.
But the number of in terms of total portfolio size and the write-offs and the highest one, just to understand a little bit of.
Yeah. See, the highest, I would have a couple of companies that are broadly in the 100x domain, right?
Yes.
Then I would have maybe a couple of companies in the 40-50 zone.
Yes.
Yeah, I'm just looking at my portfolio right now, so just give me a sec.
Interesting.
Then it would fall to a few companies, say 5 companies in the 4 to 10x range, right? So that's about 10 companies in all out of the 40 that I have so far exited, right? Because the others still have to play out.
Yes.
So those 10 companies would have delivered bulk of the returns. There would be then about another 10 companies which are 1 to 2x money back.
Yes.
And there'll be 20 companies which are write-offs, right? So if I say success is not 1 to 2x, but at least let's 5x or more, then it would be about a 1 in 4, 1 in 5 kind of a strike rate.
And in that larger, like the ones who have gone beyond 20x or 40x, what would have been that proportion?
So as I said, about 4 companies out of the 40.
And just a follow-up on that, like so far from the experience, number of years you have put on this, what is like the ideal ratio between angel investing and the becoming a LP in some fund, like vis-a-vis that?
Good question, right? So I think part of it has to do with why do you want to do angel investing, right? Now, my motivations are 2 or 3. One, as I mentioned, the starting motivation was largely to kind of give back and support entrepreneurs, just like I had received my support. I come from a fairly modest background. I could not have financed my own venture myself. And the reason why my company happened was because there was support from the ecosystem. On an ongoing basis, one of my core motivations continues to be to learn from what is happening in the startup ecosystem, right? So I don't do passive investments. And what that means is I will meet the entrepreneur, I will learn about their business before I write a check. Even if I'm writing a check through a syndicate, I'm by and large only working with syndicates where the syndicate lead will allow me that opportunity to directly interact with the entrepreneur and hence learn. When I say I'm not passive, I'm not active in the sense of being on the boards of companies, being advisors to companies. I don't do that at all because I'm running my own company. But yeah, from a learning standpoint, I think this is a lever that I want to use. Right now, both those things are harder to do by becoming an LP in a fund. Yeah, they are also harder to do if you are a passive investor in syndicates. Right. So, but if you are looking at this purely as an asset class, right, then you could choose to be both in syndicates and in funds, depending on what stage of startup do you want to get access to. Most syndicates will do 2 crore checks at a seed stage of the company, right? So you're getting exposure to that layer of startups. Most funds would tend to write a bigger check at a slightly later stage of the startup, right? Even if you're taking a angel fund, they might write a 5-6 crore check, as a second check in the company. If you're looking at Series A funds, then they will write a $5 million check once they are seeing tangible, product market fit and so on. So whether you do funds or syndicate passive participation, that depends on which stage of the startups you want exposure to. But that will give you a pure economic exposure to those startups. My belief is that from a return standpoint, bulk of the returns in this category are determined by access to deals.
Yes.
So while all of us tried, I also like to tell the story that we add value to startups and all of that. And I think that's the 20% of what we do in order to generate returns. 80% of it is, did you manage to get into the right deals? Are the best entrepreneurs coming to you? And I think in terms of an asset class, that's the key question to answer. If you're going to do angel investing on your own, especially active style of angel investing, then where is it that you can attract the best cohort of entrepreneurs? And I don't mean to imply best means 1%. Best may mean 10%, right? But best is not 50%.
Yes.
Right? And unless the deal flow is coming to you, generating assets will be extremely hard. Right? And that is part of the reason why syndicates have come up, right? Because as individual investors, I was writing a 10 lakh rupee check, right? Most people want to raise 2 crores.
Yeah.
Right? So I'm going through syndicates so that the company is getting adequately capitalized. Right? I'm going with syndicates where I think the syndicate has established a deal flow advantage. I also invest in funds, very few. I've invested in like 4 funds. But again, the criteria is, hey, are these guys looking like, A, they can follow a consistent strategy over time? And B, do they have the potential to attract a top tier deal flow? So I think that kind of is how I triage this direct versus funds, and then the importance of being able to attract the right deal flow.
And how has been the return on the fund side?
So my fund journey is relatively more recent compared to my own angel investment journey.
Right.
So the first fund I would have invested in would be a 2015-16 vintage fund. That fund has done extremely well. So I think, see, what is good performance on a fund, right? Anything above 25% gross IRR
Yes.
is something I would regard as good performance on a fund.
Yes.
Yeah. So yeah, that fund would clear it. There's another. So I've then continued to invest with that fund manager across funds. So the second fund that they have should clear it. I've invested in another fund, a crypto fund, not cryptocurrency, but blockchain fund. Which, because I don't have the expertise, I believe that team can, attract the best deal flow globally, not just in India. So I'm doing it both for learning and for returns. I think they should clear it. I invested in a seed stage fund, focused on SaaS sector. Very good credentials. I don't think they will clear it. So yeah, the fund experience will be equally mixed. But yeah, in terms of fund selection, I would again, as I said, I know which are the 5 funds in the market that I want to go after. I may not get access to all of those. Access to funds is another big issue.
Right.
Right. But that's the list of 5. So even if I do 3 out of those, I'm good.
Yeah. Thank you. Thank you for sharing. And I would just like to give one feedback also that I have just recently, since a year, joined IN, and I'm very happy about the whole journey they bring on. Like, it's very interesting. So
I'm glad to hear that. And honestly, I think, see, IN, again, from IRR standpoint, will clear the thresholds that I was mentioning. But having said that, I think the biggest thing that gives me satisfaction is, IN has probably trained for 500 angel investors by doing.
Right.
Right. Many of these people who joined us as members initially have gone and raised their own funds later.
Right.
So just that proliferation effect of IN is something that I, derive a lot of satisfaction out of. So, glad to have you there. Welcome, and I hope you have a great
And just
investing.
one last thing, because you mentioned of those 5 funds you would go after. Would you like to say it? Just that would give some perspective.
Sorry, you would like me to name names?
Those names which you would like to go after. Not everybody will get
I
there.
don't think it's fair for me to name the funds that I'm not in.
Yeah.
But the funds that I am in, so the first fund that I went in is Stellaris. The second one is the IIM Zones Fund. And that, from a performance standpoint, the confidence I got is from the angel portfolio that we've been running. And third, the blockchain fund is a fund called Taike, which Prashant runs. And he's a fairly credible person in that industry. So those are the 3 funds that I am in, and their things have worked. Again, I would not like to mention the fund that hasn't, but these are the 3 that I'm currently in and seem to be doing well.
Thank you.
Alok, from a portfolio building perspective, and you touched upon doing 8 to 10 companies a year, having a 5-year time frame, right? So essentially, would just love for you to elaborate a little bit on how does one kind of build their thesis. If you're doing 8 to 10 investments a year, how are you shortlisting those investments? What should be like a typical check size for an early stage investor across these across these companies, so yeah, basically just on portfolio building over a period of time, how does one go about it, think about it?
Yeah. So see, first let me talk about the thesis building part, right? Now, when I was in the venture capital business, thesis building was a very strong, very important part of what we did, right? So, for example, we invested in Bharat Matrimony. That was our first deal as a fund. That's not my personal deal, but as a fund, that was our first deal. And we had invested in matchmaking globally. We like marketplaces businesses, right? So that is one end of the spectrum. As we invested in some of the companies in 3 or 4 years' time, one of the hypotheses that we put out there was, there are spaces in India which are more execution risk oriented. And I'm just giving an example which is quite different from what we typically mean when we say thesis, right? So I deliberately want to put that example out to say, hey, thesis can be along various dimensions. It doesn't ever have to be a sectoral thesis. So we said, hey, in India, there are several execution risk oriented businesses that will deliver venture style returns. Right now, this is not typical in the US market where we came from. Right, Canaan was and is a US based venture capital firm. So in US, essentially, you need concept risk to generate venture style returns. Right, you don't get venture style returns by investing in execution risk. So we said, no, in India, that possibility seems to be there because there are white spaces. Right, everything is not a disruption space. Right, financial services that my current company is in, they're not disrupting anyone. 85% of the market is not served. We are trying to serve them. Right, so it's a more execution risk-oriented business than a concept risk-oriented business. And in execution risk, we would like to back experienced founders who have execution track record rather than young founders who have a innovation advantage. Okay. Now, what did we do there? We backed Mr. Ashok Soota at Happiest Minds. It is the most unlikely venture deal. Right, and 2014 VCs were not investing in IT services, right? And we invested in the first round before the company was incorporated. Obviously, we are privileged for the fact that Mr. Soota took our money, but it was a thesis-driven investment, right? On the kind of entrepreneur that we want to back and the kind of risk that we want to take, right? That company, the initial plan was 6 years to IPO. They executed 6 years to IPO. Right, that was the quality of execution. So your thesis can rest on any of the elements of saying, hey, what is my hypothesis on how money can be made in this market? It doesn't have to be purely sectoral. I am actually very wary of sectoral thesis because, as I mentioned earlier, in Indian market, every 2 or 3 years, the sectors that are booming tend to change. So it's not that your previous investments are irrelevant. But now, if you want to invest in something that is going to see that early stage scale up. Now, your previous investments would have triaged by now. Some of them would have died. Some of them would have already crossed that early stage barrier, right? So now they're building at a growth stage. But for that reason, I'm not a big fan of narrow focus on sectors. Now, in my angel shoes, I don't do a lot of thesis building, right? In some sense, I'm exposed to what entrepreneurs are building rather than what I think they should build. Part of it has to do with how much time I'm spending in the market to build thesis. Thesis building is a serious business, right? You speak to 50 companies and you come up with a thesis. I'm not spending that kind of time now in my angel investing, right? So I'm more responding to what entrepreneurs are bringing to me, right? And to that extent, I will assess more than direct, what we build. So in Cayman, for example, when we were building thesis, there was one entrepreneur with whom we actually brought him in as an entrepreneur in residence because we had the thesis. We tried to co-create a business. Now, that one did not work out. But when you're doing thesis building, that is the extent to which you will go to play the thesis out.
And when you assess, how do you assess?
So 3 or 4 things. Again, I'm answering the angel question. As a VC, you have other kind of levers to control. So you can have different criteria. You're on the board of the company. You have more capital to put to work, right? So those levers, for me, I don't make themselves available to me in an angel role. So I think for me, one, the smell test of the business itself has to work, right? Do I intuitively understand what they're trying to do? Do I think there is a space in the market? And I'm the first one to admit that I do that with very little market knowledge in many areas, right? So how do you draw that conclusion, right? Now that depends on how the entrepreneur is presenting the opportunity, right? So suppose someone comes to you and says, hey, 85% of MSMEs in India are not financed, right? We are going to build a business to finance those. There's a clear need in the market, right? I'm like, what did you just tell me? You told me what Economic Times wrote yesterday, right? That's not what I'm going to invest in, right? This is all secondary knowledge, right? Can you tell me insights from customers, right? What do they want, right? Why is the market underserved, right? What kind of capabilities will you build which will allow you to serve that? Why will those capabilities be differentiated, right? So I'm looking for bottom-up understanding of the market on part of the entrepreneur. And I'm looking for insights that are differentiated. Facts are not differentiated, right? और रेड सीयर का रिपोर्ट आता है, सबको पता लग जाता है कि मार्केट का व्यू क्या है, right? So the entrepreneur has to be able to take you beyond that, right, and offer insights around which they're going to build that business. So that is one part which is important for me to appreciate the opportunity. Second is you're looking at an entrepreneur, and while I'm not active with these companies in terms of being an advisor or on the board, I just want to make sure I like them, right? Now, some of those will be criteria that in my mind lead to successful investments, right? I mentioned one, which is, do they have a ground up knowledge of their customers? Have they spent time in the market? Have they care to go talk to their customers even, right? Half of your deal flow will go away as soon as you put the criteria of has the entrepreneur gone and talked to customers, right? That simple piece will just filter out half of your deal flow. Yeah. But others might have to do with, are they doing it for the right reason, right? Classically, for me, entrepreneurs are saying, hey, I want to build a 500 crore company, in 3 years' time, right? It has not worked, right? So that is not what I'm looking for. I'm looking for a purpose that the entrepreneur is bringing to the table, where they will stick through it, even if the company takes 10 years to build, right? People often ask about single founders, multiple founders. I've invested in both. Both have worked for me. So I don't necessarily, have a preference for one founder team, 2 founder teams. If it gets beyond 2, then role clarity becomes very important. It should be clear, who's doing what, and more importantly, clear who's the CEO of the company. I don't believe in co-CEOs and so on and so forth. So I think the team construct, if the team is bringing some degree of experience in the market, great. But then, I've invested in a student entrepreneur and he has done extremely well. So that's not a prereq. In fact, I'm invested in more than one, maybe 5, 6 student entrepreneurs. They are very creative. They're not encumbered by, hey, this is how the industry works, or this is what the industry has learned. But like that, capitalization is an important piece. Understanding how much money is it likely to take for a business to get built. Not just in this round. This round is important, but to get it built and having some sense of, hey, is this kind of capital going to be available? So there, the fact that I've been in a VC firm helps me a little bit, because I think I have some sense of, hey, in the next round, what will you need to demonstrate to the investors to be able to raise money? And then, how likely are we to get to it with the amount you're raising right now? So in fact, with one of the kind of syndicate leads who I work with closely, we were discussing a deal. I met the founders. And when we were debriefing, I said that this is going to take a lot more capital in the seed stage. So my assumption was he's raising 2-3 crores of capital, and the syndicate lead clarified, "Nahi, 12 crore raise kar rahe hain." So suddenly that deal makes sense to me if they're raising 12 crores. It would not have made sense to me if they were raising 2 crores, because I know that with 2 crores, they're not going to hit the VC milestones for the next round. Right. So I think overall level of capitalization is a very important piece. And as I said, I'm looking for some sustainable edge. Often technology plays into that. But in my angel shoes, I don't think execution-driven businesses of the nature that I described earlier are a sweet spot for me. And that has everything to do with the amount of capital that you're willing to put to work. Right. So when we initiated Happiest Minds, it was probably one of the largest Series A deals done till date. In 2012 is when we started that company. Right. So, pure execution-driven plays just require a different level of capital at the get-go. So happy to elaborate on other elements, but these are some things that come to my mind.
No, super relevant. I think Samudra had a question, and Sidhu as well.
Mhm. Sidhu, you want to go?
Yeah, sure. Thank you, Alok. My question is around the angels' involvement in giving direction to the portfolio companies. Do you have any opinion on should some oversight come from angels, or should they take a more hands-off approach in the portfolio companies?
See, there's no single answer to it. I do think that some oversight should come from somewhere external to the entrepreneur. Right? I think there is just merit to oversight, merit to different kinds of ideas being discussed. And again, when you're talking to the entrepreneur pre-investment, I do think that you want to get comfort that the entrepreneur will genuinely welcome, not just do it for the sake of doing it. So if you are playing the role of the lead angel, then clearly it becomes your job to provide that degree of oversight. Normally, what I've seen is that oversight from you is required till the next round of financing. Once the VCs come in, that role starts to shrink, and it's okay for it to shrink. In my case, because I don't want to commit myself to that role given the time that I want to manage, I actually don't provide a lot of oversight to the company. Right? The mode in which I work is I tell my entrepreneurs that if you need my time, then I'm available. Right? So every month, let's say out of the 70 active companies, maybe four entrepreneurs of mine will come back and say, "Alok, want to discuss something with you." Right? So they ask for my time. There's a specific set of things that they are asking for. They're not coming and giving me an update. They will send an update on the email to all investors. That's a standard practice now. Now, normally, when do they need help? Their core hypothesis on how will they get to the next round of financing with the current money has not worked. So they're looking to, shift, twist, pivot, whatever you want to call it, and they want to bounce off ideas there, right? So that is one reason why they would come. The second typically is that they are beginning to think about their next round of fundraising, right? And they would like to bounce off, hey, what is the story we should tell, right? Who should we go to? Just given that I've been in that industry, sometimes they'll also come and say, can you connect us with these 5 people, right?
Okay.
So typically, yeah, strategic shifts or, fundraising events are where I've seen most of my entrepreneurs will come and talk to me. Now, I'm happy with that. I don't have any issues with the fact that if something in operations is going bad, they don't come to me. Because they might have other people that who are capable of helping them for those kind of issues, right? So even when I'm running my own company, I've got 10 people on my board, on my advisory panel, and people who are just well-wishers. I don't go to all 10 for everything that I need help with, right? Say, hey, for this kind of an issue, I want to reach out to this person. So in an angel role, typically that responsibility is getting split. The oversight responsibility obviously has to be concentrated. 5 people can't provide oversight to the same company. So to that extent, I think the oversight role is slightly different from being able to help the company. I don't have a lot of belief in the notion that your help is what creates the company. So just putting that in context, I don't think there's a lot of correlation. For example, in the companies where I've been successful, to saying, hey, what was my degree of involvement there and what's the level of success? I don't think that's correlated a lot.
Okay. Thank you so much. I didn't get the name of the blockchain fund that you were referring to earlier.
It's called Tykhe, Tykhe.
Okay. Thank you.
It's not India. It's not an India-based fund.
Okay. Thank you.
I think Gaurav has a question on the chat. Like, generally, how much capital do you invest in angel investing vis-a-vis your overall portfolio?
Oh, vis-a-vis my overall portfolio. See, I think, so I'll tell you how the journey has been. I probably started with a number which would have been about, target number which would have been about 10%.
10%.
Right? Now, what has happened over time is recycling of capital has happened. Okay. So just to give you a broad threshold, see, if I have invested, let's say 100 rupees in angel investing so far, right? The exits that have been generated correspond to 40 rupees of invested capital. 60 rupees is still invested in the 70 odd companies, right? Now, that 40 rupees has given me roughly 200 rupees of realized returns, cash in bank, which is higher than what I've cumulatively invested.
5x, yeah.
Right? 4.8 ke kareeb hai, but yeah, in that ballpark. So now that money is recycling itself. So now the notion that, hey, what percentage of my portfolio is not very important for me. But yeah, today it would start to look like if I were to put outstanding assets, I'm not counting the 200 rupees that has come back because that's just part of, I can allocate that anywhere. But the outstanding portfolio would probably, look like still 10% of the corpus. But all of that 10% has been generated from prior angel investment. So if I just look at the separate pool, there's nothing really that I've invested as we speak, right? That's how I like to think about it, because at least in my mind, I'm doing angel investing for a different reason. I continue to do it for a different reason. And if I lose that money, then that should be fine.
So on that note, thank you so much, sir, for that. On that note, I had a follow-up question that what is the conviction what is the method to choose the products or founders in the initial first 20 companies? So let's say if I'll start. So what is the method you use to choose and select those 20 companies, that these are the 20 firms where I want to invest as an angel? So do you look at the founder, or do you look at the track record, or do you just look at the...
I described some of those criteria before, right? In terms of, hey, what am I looking for in the idea? What am I looking for in the founder? What am I looking at in the ecosystem to say, hey, will future capital continue to be available here? So I ran through some of those. If you have specific questions around that, I'm happy to dive in.
Yeah, so it's more of like once you have done that experiment, what did you see in the multi-baggers that what you have seen is working for you, and then what is not working for you? So
Very hard to correlate, Gaurav. You don't know when you are investing which one will work and which one won't. Otherwise, you would put all the 100 rupees in that one,
yeah,
right?
I would-
So
yeah,
we look smart on hindsight, especially when newspaper publishes a success, because newspaper doesn't say how many have you written off, right? So
yeah.
I'm telling you, if the success ratio is 1 in 4, perhaps, maybe 1 in 5, something like that. तो वो पहले पता नहीं होता. Right? One can say, very ambitious founders are the ones that should go behind. But, founders express their ambitions very, very differently. So if I look at, just as an example, if I take Gaurav from Bluestone, right? Very understated founder. We had invested in his first company, Chakbak, from Kenan. So I know him for 15, 20 years now. Right? He's very understated. आप उसको देखोगे तो आपको ऐसा नहीं चमकेगा कि अच्छा ये जाके TEDx talk देगा. But very solid and has grown immensely over the last 15 years. Right? So I think you want comfort in some of the basics. And as I said, are they doing it for the right reason? Do they really have passion for doing this? Where when the downturn comes, they are not going to quit. I've had founders कि नीचे गया थोड़ा सा तो बोलते हैं यार मेरी opportunity cost change हो गई. Founder की opportunity cost change हो गई तो फिर बचा क्या? Right? A founder can't think in terms of opportunity cost. Right? Because 3 बार तो नीचे जाएगी company before it becomes successful. Right? तो वो 3 बार अगर opportunity cost का क्वेश्चन पूछा तो एक बार तो क्विट करेगा.
Alok, a different lens on this question. How do you build great deal flow? As an angel, how like what are some things that have worked for you? Which have enabled the best founders to kind of reach out to you as an angel and take your check.
I don't know whether the best founders reach out to me or not. As I said, the best का मेरा definition is top 10-20% आना चाहिए आपके पास. Right? So I think वो आ रहा है. Honestly, I think again I've been a little lucky there. Because having been in a VC fund, some of that deal flow already existed. Right. Also, my first company, Jobs Ahead, while I think it was just about moderately successful, and again, this along the same criteria that I specified when I said my company is being successful, but somehow at that point, उतनी ज़्यादा startup successful होती नहीं थी, तो थोड़ा सा visibility मिल गया था. Right. So I think some of that deal flow has formed and sustained. I am also, because I'm involved with the Indian Angel Network, I'm involved with TIE. Right. I think there is a certain level of comfort that entrepreneurs derive, right? Because they have trust points to associate, right? So reputation बोल लीजिए, जो भी बोल लीजिए उसको. Once you get a few successes, then referrals become a deal flow, right? So for example, I invested in Curofy, right? That company did well, exited. It had 3 founders. Now those 3 founders have started 3 companies. Yeah. I've invested in all 3 companies. Right? Like the founders. मैं assess क्या करना है? आपने पैसा बनाया मेरे लिए, right? I have nothing negative about. I like the founders. I'll invest. So over time, that starts to build out. If someone is getting into it for the first time, right? So and again, with the desire of being in the active mode. If you are doing it in a passive mode, you are not the one who has to build the deal flow. The person you're going behind, you have to be sure that he can build the deal flow, right? But if you're trying to build it in the direct mode, I think engaging with the ecosystem is important, right? Putting yourself out there, go attend some events, meet with founders. Don't rush to write your first check, right? देख लो 50 companies, then write your first check after that, right? Help out founders where you can. That takes you a long way. People remember. Even companies that you've not invested in, if you can help, right? Those founders will keep coming back to you. Right? A lot of ecosystem relationships get formed through that. Third, I think a lot of deals, whether you are part of a syndicate or not, reality is getting syndicated with multiple people today. So I think in today's context, forming those relationships become important. right? So if you're running a syndicate, you'll go to Indian Agent Network. You'll say, "Yeah, if you see some deal, right, we'll be happy to invest with you, co-invest with you, and we're happy to send our deals that we are looking at Europe." So a lot of this is happening in the ecosystem, which then allows for somewhat shared deal flow because deals are not getting done exclusively. So I think those are some thoughts that come to my mind on if you're starting today, what you could do.
Great. Thank you, sir.
Super relevant. Ace Enterprises or Kushal, if you have questions.
Hi, Kushal here, if I could go. Yeah. Hello, thank you so much for the. Sorry, I just took the opportunity. I hope that's okay. Alok, hi, thank you so much. I think this has been good learning for me at least as well. I had a question on portfolio construction and in particular about units of allocation, right? Um, we've all gained and understood over the course of a few years that when you're doing angel investing, like the way to think about it is that you should be eventually invested in 40, 50 startups, right? But let's say today we do not necessarily have the capital to say कि आज मैं 50 startup में पैसा लगा सकता हूँ, right? When you were starting off, what was your position like? Were you well capitalized to say that I'm ready to invest in 50 startups, or
No,
was
no,
it
no,
like
no.
take it? Yeah.
I wasn't, and I did not have this insight कि कम से कम इतना करना चाहिए.
Okay, great.
No,
All right. In that case,
एक करते हैं फिर दूसरी देखेंगे.
right.
So
So
we started in that.
Okay, great. So
Sorry, Kushal, your voice is breaking up.
Kushal, you want to type in your question?
Does someone else
Audio,
want to
right?
go? We can come back to Kushal later. Yeah, go ahead.
Yeah, Mukesh. Hi, Alok sir, and hi, thanks for this opportunity. Yes, Mr. Alok, I would like to understand one part with you, but you being an angel investor, what's your intake and a bet on India's infrastructure industry? And I see that you said one thing like in the education or in the job background, where the system is going simpler and the same, there's no drastic change in that. Do you see anything in opportunity in infrastructure that what old schools are following and now there is any changes are coming up you would like to do, or any insights on that?
When you're saying infrastructure, are you referring to the hard infrastructure, real estate and things like those? What are you referring to?
Completely into like construction, sir, like all like old traditional things now we've been with the new startups and
See, honestly, I don't understand that space very well.
okay.
Right? If you ask me what is my percentage of portfolio in real estate, that will probably be just the house that I live in, this one. So I honestly don't understand that. I have lost money in real estate. That's the asset class where I've lost money. What I can tell you is, if I look at my deal flow, where I'm seeing a reasonable amount of deal flow come in is in fractionalization of assets.
Okay.
So saying, hey, we'll build a portfolio of real estate assets, and you can be a part owner in that. Right now, is that just a REIT? Does it have more legs than that? I think that comes down to saying, what do you buy? Right? Purely a REIT, it might be part of my portfolio, but it's not an angel investment.
Okay. Because one thing
you need to add value to it, right? If you say, okay, for example, if you look at equipment leasing, buying the equipment and giving it to someone else on rent, right? You manage the full life cycle of the equipment.
Okay.
No, so I think there can be interesting companies built in the fractionalization of real estate assets, but so far I'm not invested.
Because I heard one thing about it, I just made a note as well, that you are more into, when you look into the founders and the concept, you look into the more purely which is execution oriented business. Would you be interested in parts in?
No. What I said was, at Canon, we developed one thesis, and this was not the only thesis we were working in.
Okay.
Which was around execution-oriented businesses. But as an angel, I actually don't do that.
Okay.
And part of the reason is because pure execution businesses should, in my mind, start with a capital advantage. And as an angel, I don't bring that to the table.
Wonderful. And one last question, since you've been started with year 2006 with investing and all, and very first company you sold, how easy for you to take that very first company to be sold out and move on with building lots of companies around you?
No. I think that's an overstatement. See, the first company we were building, I was 27-year-old. My co-founder was 27-year-old when we started.
Okay.
Right? When we sold, we were 32.
Mm-hmm.
We were kids. आ गया किसी ने खरीद लिया, हम खुश हो गए, खरीद बेच दिया. It was not easy, difficult. We were not on the road to sell.
No,
There was
why I meant to ask is like, is that when we are building a company, is that string attached? How much should be there? Like when it coming to we should be okay to let go things if it's opportunities or like that mindset.
That's a broader question. That's a broader question. See, selling or not selling. So let me take the current context, right? When I'm building Indifi, तो कहीं दिमाग में नहीं है कि बेचना है. क्यों नहीं है, right? Because we built it for now 9 years, so we could be thinking about कि 9 साल हो गया बेचते हैं, right? But it seems like there is a 30-40 year opportunity in building a large asset here, right? So that runway to how to grow the business, how to become meaningful, we are still, in the context of Indian financial services, we are minnows, right? छोटा सा अभी. So that desire to continue building it is there, and hence वो नहीं है. Now your second question is, how willing should you be to give up control? I think as soon as you raise money, you give up control.
Wonderful. Okay.
Right? And I think there are different styles of entrepreneurship, so I don't want to kind of emphasize that this is the only way of building it. There are entrepreneurs who have done a great job by maintaining control explicitly. I'm not just saying, control through influence, but, that's their style of building. But in my case, I think it has helped me a lot when multiple people believe that they own something.
Okay.
Right? That is when their real contribution comes in. That is when they are thinking about your company. Right? And if you look at some of the organizations, non-company organizations like Indian Angel Network, right? The reason Indian Angel Network got to any degree of success is because, 100 people would go out and say, I am part of Indian Angel Network, हमारा network है, आइए आप भी आइए. Okay. Somehow, that sentiment was there. It was not seen as, अच्छा ये 3 लोग हैं, इनका network है, हम तो fees देते हैं. So we were able to build that degree of ownership amongst our member base, right? And that multiplies, right? Now we are building Plaksha University. 100 founders.
Oh, wonderful.
Right? Now the initial 3 founders, I'm not one of those. They could have said they're control karna. But then you don't unlock the power of collaboration. And the same is true of your company. You've got 10 board members. Do they truly feel like they can change the direction of the company with their inputs? That depends on how you behave with them. If they don't, they will come exercise their oversight role. But they're not going to think about your company day in, day out. Sense.
And coming to the last but not the least, so just that one.
We have a couple of other questions as well, and I know we have a hard stop at 1:30. So
Sure, sir. Thank you. Thank you, Alok, sir.
Happy to you can type in your question, and happy to post it to Alok later, and maybe get a reply from him. Thank you. So Alok, I know that we're short of time. I think just to end today's session, I had 3 questions, and maybe you can prioritize. So one, I know that you mentioned that you don't believe in narrow sector views, but are there 2-3 sectors in India which are very exciting right now, where there are large business to be built over the next few years, and from an angel investing perspective, that are exciting? So of course that was one question. Second is, what about 2-3 mistakes that you made in your angel investing journey, which you kind of learned from, if there are any for people to take away from? And final, the best resources for people to learn more about investing.
See, in terms of sectors, I think India as a market, if you believe that in the next few years we are going to be going from 3.7 trillion to 5 trillion, and it is an underserved space in terms of product, services, and brands, then that landscape looks pretty wide, right? And I firmly believe that entrepreneurs develop the conviction around spaces, right? Otherwise, if you look at 3 years back and say quick commerce, it was a failed category, right? Then entrepreneurs came in and said, hey, we know it hasn't worked so far, but we think we can make it work because of XYZ, right? So I think it's important to kind of keep yourself open to that. Having said that, I think B2B businesses have been underemphasized so far. I do think there's a larger opportunity in that space. Some of that is getting uncovered by the trading platforms and so on and so forth. But everything from marketing to trading to financing, I think that's just a category that is underemphasized. I think healthcare again seems like a space which has a lot of scope for innovation. And when I say healthcare, I'm not just saying formal healthcare inside the clinic, but even outside it. The wearables revolution is starting, personalized healthcare is starting, holistic or alternate is starting. So I think there are several pieces there which could be potentially interesting.
Longevity.
Yeah, I'm a close follower of that, sense I will not mention that as a space. But yeah, if you, I think the holistic and personalization, I think to me are, in my mind, better ways to describe it. Yeah, so I think those would be some of the areas that would be top of mind for me. But it's not that I'm saying, hey, I'll only do deals that come in this space, or I'm going to go actively scout for deals in this space. Sorry, what was the second question you had?
Second question was, like 2-3 of your biggest learnings or any mistakes that you made in your journey.
See, I think I don't treat investments that have gone well or not gone well as successes or mistakes, right? As I said, there's a large element of genuine risk in investing at this stage. But I think the only places where I have felt like I should not have done something was where I've seen, ethics issues on part of founders. So that has happened in a couple of cases, and I just want to be kind of more vigilant towards those going forward. But yeah, in terms of investment going bad, that happens all the time.
Got it. Super. I know we're out of time, so like one maybe last learning resource for any young investors, like anything that you found very valuable, a book or a series or a podcast that you follow. Or
Not really. Not really. I think being in the ecosystem, talking to people around you is just a far more valuable asset. I do think that as soon as information becomes secondary, by and large, it becomes useless. So, even now, a lot of what I would learn on what is going in the market and, staying current with it, what would be basis meeting other people who are doing angel investing or even venture investing, and understanding how they are looking at certain spaces. For example, if I take direct to consumer brands today, right? It's a pretty split house in terms of, hey, is that a successful angel level investment category or it's not? Not that successes haven't been there. You look at Mamaearth, you look at Good Glam, right? There have been successes out there. But there are very different viewpoints on whether it is worthy of angel investment from a return standpoint and risk standpoint and breakout potential, how commoditized is the space versus not. And I think people who are looking to do investments in that area must certainly hear both sides of that argument. Right? SaaS, for whatever it has yielded, the best SaaS investors today in India are questioning SaaS out of India very, very intently. And you have to be in that discussion. If you read a blog post of how one company became a great SaaS company 2 years back, that's history. Yeah.
Got it. Super. I think Kushal has just typed in his question, like, what was your typical ticket size in your initial investments, and when did you decide to up your ticket size?
So I haven't, right? So because of the motivations for investing that I had, and I wanted to hence be able to do a lot of them, my ticket size actually has not even moved in line with inflation. My typical ticket size when I started out would have been about 10 lakhs. Today it is about 15 lakhs.
Wow.
But it's the same amount every company. So I don't have a clue at the point of entry of which company is more likely to be successful than another company. I just don't have that foresight.
Super.
Yeah, but I think the ticket size back compute from your purpose, right? If you are willing to spend 100 rupees, distribute that across at least 20 deals. See, in the age of syndicates, you can be writing 3 lakh rupees checks if you want to. There's no issue. So the notion that, hey, I might not have enough corpus to do 20 deals, that in my mind is not an acceptable argument. If you don't, just don't do it. Otherwise, just scale down your ticket size where it fits. Sorry, I will have to log off. I had scheduled
No,
another
thank
call
you.
at this.
Yeah. Thank you so much, Alok. Very relevant. Thank you so much for your time. Really learned a lot, and looking forward to collaborating again. In the future.
Thank you so much, and pleasure to be here. Thank you everyone for your participation and engagement.
Yeah. And please feel free to reach out to me. I've pinged in my number, email address. If you have any questions around angel investing, or if you want to join the Accelerate Syndicate, happy to share more. Thank you, everyone. Have a good
All the
day.
best.
Thank you.
Thank you. Thank you.
Kushal, you want to say, you were saying something? All right. Kushal, sorry, you were saying something?
No, I got my question answered. Thank you, sir.
Great. Thank you so much for joining. Have a good day.
Hey, Karan, can you, if you don't mind, can you drop your LinkedIn as well? We'll
I'll
stay connected.
Yeah. I'll
Thank
just do that.
you. Have a nice day, everyone. Bye.
Thank you. Thank you.
Thank you.
All right. Take care.
Bye.